What's up, homies? Welcome to another episode of the Homies Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together we're going to break down this crazy real estate market. We got a great podcast for you today. This is for you investors or you people or homies who are looking to purchase an investment property. These are some questions that we've been asked, so we figured let's make a podcast about it. How to purchase an investment property. What does the financing look like? What is property management? What are the benefits of purchasing an investment property? So these are questions that Angel and I are going to answer. So Angel, let's just hop right in. What down payment and requirements do you need to purchase an investment property?
Yeah, good question. So I'll go over them real quickly. So minimum credit score, you're gonna need at least a 620. Down payment's gonna range from 15 to 25%. Your maximum debt to income ratio is 45%. And then you're usually gonna need a required reserves of somewhere between 2 to 6 months, right? Depending on the big thing when it comes to figuring out if a credit score is going to be eligible, like a lot of times a 620 is not going to qualify, right? And that's not up for us to decide. Well, sometimes the bank does set a limit, like we're not going to lend out to, and we're not going to do investment properties unless you have a 660 FICO score or better. But also it's up to the automated underwriting system, the DU or the LP, like we call it in the lending world. If this system, this computerized system we run it through, takes it, and then the bank allows you to go down to 620, then you can move forward. Many times it doesn't. You need at least usually, I have one right now, an investment property and an investment refinance. It's a 660 credit score, right? And then, but really where it makes sense is 700 plus FICO scores, just for you're going to get better interest rates, right? And better terms and all those things. And then the reserves as well depends on what the system requires.
Okay.
Sometimes might require the lower the credit score, usually requires a little bit more reserves, things like that. Down payment all depends, of course, on what type of financing you are doing, or how many units, I should say. 15% down will be for single family. Units will be 25% or more, right? So, or 25% minimum, I should say.
Gotcha. Thanks, Angel. That's really important. That clarification there. Are there higher interest rates for investment properties than there are for a primary residence?
Yeah, so definitely interest rates are higher, right? These are riskier loans to the bank, right? Because you're not going to be the one making the payment. You're depending on a tenant to make the payment. And if tenant's not making the payment, then guess what? You're going to have to be paying out of your pocket. So bottom line is it's a riskier loan to the banks and to the investors. So what do? Is they, of course, increase interest rate. I would say typically around 1%. So right now rates are at, let's say, 5.5%. An investment rate, you're looking at about 6.5%. Of course, depending on your down payment, FICO score, and all the other factors that come in with that dictate interest rate pricing.
Gotcha. Yeah. So it's looking like a 1% higher than what you would traditionally see for a primary residence and a home that you're purchasing to live in.
Yeah.
Angel, can you purchase owner occupied then rent it out after a year as an investment property?
Yeah, of course. You could definitely do that. When you purchase your property, the goal is, or when you have to live in the property for a year, right? After you live in that property for a year, if you want to go ahead and rent it out at that point, there's definitely no problems. You're not breaking any laws or guidelines or rules doing so.
Yeah, and that might be a good idea to try to lock in a lower rate so that you're not stuck with a 1% higher interest rate. So something to consider if you can see yourself living there for 1 year, because again, you have to follow those guidelines. If not, it's considered mortgage fraud and you can get in trouble.
Exactly.
So there are some investment property tax implications, right? And let's take a look at some of these. The mortgage interest rate on an investment property is fully tax deductible. You can also deduct many expenses related to the property, including property taxes, maintenance, insurance, and also depreciation. If you rent out the home for more than 14 days per year, the rental income is taxable, right? And in addition to the mortgage interest, again, there's property taxes, there's maintenance, utilities, insurance, materials and supplies used for the upkeep of the property, advertising the property to attract renters. There's a lot of things that could be written off, which is why a lot of people like purchasing investment properties because of the tax benefits. Angel, let's talk about property management. So
just real quick too, before we jump into the property management, It's like a quick disclaimer. We're
Mhm.
not tax professionals. Anything when it comes to investment property, we highly recommend you go
Mhm.
talk to a professional your tax preparer, CPA, just to verify or
Mhm.
clarify anything related to the tax benefits and or anything tax related to an investment property.
Yeah, absolutely, Angel. Thank you for for saying that.
Yeah.
I'm not a CPA. I'm not doing your taxes. So you want to make sure you run it by them. Angel, let's talk about property management. So, what is property management, and then how much do they typically charge?
Yeah, so property management is the people who, it's what the name says, right? They manage your property, and they usually charge about 8 to 12%. So these are some of the things that they would do for you for managing your property. They first they know how the market is, right? Because they usually work with homes in that area, so they know how much to rent your property for. Um, they show your property to potential tenants that will qualify. They screen your tenants, making sure they have the right credit scores, see their income, verify all those things, right? And then they collect the rent on your behalf. So what they do is they collect the rent, take their portion, and then pay you out your cash flow, right? Or the
Mhm.
money
Mhm.
after their fees. And then they handle the late rents and evictions, any things like that. They'll take care of all those things. So those are just some things real quick that property management does. Another big thing is maintenance. They take care of maintenance. So if the property needs to have maintenance done, they'll go out there and arrange the maintenance to be fixed.
Yeah, exactly. So it pretty much takes everything off of your plate. So if you
Mm-hmm.
just wanted to not have to worry about a single thing, none of those late night calls, none of those handling tenant complaints and all that stuff, property management takes care of it. A lot of people, especially when you're out of the state, prefer to do this just because it's just too much
Mm-hmm.
with the time difference, or also just to travel all the way over there to do uh, repairs and maintenance. So typically, it's very common for out of state, or as you become an investor with a larger portfolio. Once you have a larger portfolio, it's just too much work to have to worry about 5, 6, 7 properties, to always have to do maintenance calls and repairs and stuff like that. It just makes more sense at that point, if
Mm-hmm.
it makes financial sense, to just outsource the property management and get that done for you.
Mm-hmm.
Yeah.
So Anthony, one thing besides from everything we mentioned, what
Mhm.
are besides the tax? Obviously the tax benefits, but what's
Mhm.
other benefits of purchasing rental properties?
Yeah, so there's a lot of benefits to purchasing rental properties. One is it generates passive income, right? And as your property values increase, so does your investment. And this can really compound over time. Real estate values also generally tend to be a little bit more stable than the stock market. So you're not going to see those fluctuations very much like you're seeing right now with stocks, decreasing 20% in the last couple of months, whereas home prices are still staying strong. Rental income is not included as part of your income that's subject to Social Security tax. So that's nice to know. And then there's also a lot of tax benefits, like we mentioned before, that you can write off, and depreciation that you can write off, that only makes that cash flow higher, that only
Mm-hmm.
makes that return on investment better.
Mm-hmm.
So these are some of the benefits that come with purchasing rental properties. One of them that I really want to emphasize is how you're able to leverage real estate and really start to generate wealth quickly. So, what I would say is, if you have one property, right, that you put, 20% down on, right? Let's just say it's a $500,000 property and you put 20% down on, and that property appreciates, 10%. So now you made $50,000, because now it went from 500 to 550. Now just imagine if you had a portfolio that's 10 of those homes, right? So now you have, instead of having $500,000 in real estate values, you have $5 million in real estate values, and that $5 million goes up 10%, right? Because of home appreciation the past year. Now that $5 million turned into $500,000 in real estate wealth, right? In appreciation, in wealth, in equity. So it really starts to compound over time. And now you have a $5,500,000 portfolio, and then you give that another 10%. And then the next year, another 10%. And then it just really starts to compound over time with home appreciation. I will say that home appreciation is not guaranteed. Like there are times where the market will start to slow down. But in general, as you've seen, as we've all seen, the real estate market tends to go up. You know, I can't even think of what prices were 50 years ago. I would imagine, you know, that $500,000 home was probably $80,000, right? $70,000, and now it's worth, you know, 7, 8, 9 times more. So, this is really where real estate comes as a really strong tool in building wealth. And the wealthiest people in the world, they hold real estate, and they hold it for a reason.
And I think one thing Anthony didn't touch on as a benefit is not only wealth for yourself, but for your future family and for generations and generations, right? Generational wealth, it's created through real estate, right? So whenever you're purchasing an investment property or any home, even your primary residence, and you pass away, you just gave if you have kids or whoever the case may be, whoever you're passing it on to, you just gave them such a huge asset to their life, right? That they can leverage in other ways to hopefully build more wealth for the next generation, and so on and so on. So I think that's a major benefit. And me now having a kid is something that makes me look at that even more now. And you definitely just want to have more for your kids, and then for their kids, and so forth.
Yeah, absolutely. And then here's one nugget that we didn't cover on this podcast yet. And it's really important. And I think a lot of people overlook this. I see it all the time. When you own investment property, please stay on top of your yearly rent increases, because when you fall behind, it makes it that much more difficult to sell the property. Just imagine you're trying to sell your investment property. It comes with the tenants. The tenants are paying 50% of what the rent value is, right? The market rent value is. So instead of paying $3,000, they're paying $1,500. An investor that wants to purchase a property, it doesn't make sense for them. So now you're weeding out all the investors, because they're not going to want to pick up a property that's getting, 50% of what the rent should be. So you want to make sure that you stay on top of your rent increases, because it makes it so much easier to sell your property, and you can sell your property for more.
Yep. I mean, it's hard. Sometimes you become friends with your tenants, and they've been good tenants over time, but you have to do what's that Anthony said, you don't think about it in the moment, but later you may need to sell your property for whatever reason. And those are the properties that I think we both see sit on the market the longest.
Yes.
Is those duplexes and triplexes where, one or two of the units are vacant, but then they have that one tenant that's paying $800 on something that should be $2,800 a month. It really does kill a lot of deals.
It kills a tremendous amount of deals.
It doesn't make sense for many new investors that are trying to purchase your home potentially.
Yeah, exactly. And then sometimes tenants can be very difficult in leaving. So it makes it difficult for someone to even evict them, so that the person that purchases the property can move in. So you don't want to deal with any of that mess. It just makes a lot more sense to just do the yearly rent increases, stay on par with what the market looks like, so that when that time comes and it's time to, sell the property, it's going to be like 10 times easier. Your property is going to sell for $50,000, $100,000 more, because now the new purchaser is going to be absorbing market rent property, and they don't need to worry about placing a tenant in there.
So challenging to take them out. Someone who's paying, let's say again, that $800 a month, lived there for the last 15 to 20 years. That's their home. And you tell them you have to leave your home. Not only do you have to leave your home, but you're going to have to go find somewhere else to rent, and it's going to be 3-4 times more what you're paying right now. Best believe that tenant's going to fight tooth and nail to stay in that property, or to do anything they can not to move out. That's definitely what's going to happen.
Yeah, absolutely. So, homies, I think this gives you a pretty good idea of purchasing investment properties, some of the nuances that come with it. Angel, where can we find you at?
At Your Mortgage Angel on Instagram.
At Your Mortgage Angel on Instagram. You know where to find us, at the Luevanos Group. If you haven't already and you're watching this on YouTube, subscribe to our YouTube channel. If you're watching this on app or listening to this on Apple Podcasts, Spotify, I'm a big fan of really watching the YouTube videos, just because there's typically charts that we put. And then when you subscribe, it really does help us out. And again, if there's ever any questions or anything that you would like answered in a podcast, just let us know. Comment them on the YouTube video or send us a direct message. With that said, homies, I want to wish you all the best. Take care and stay safe.
Thank you, homies. Hey, homies, it's Angel from the Homies Real Estate Podcast. This podcast contains our opinions and is for educational purposes only. It does not guarantee any projections and should not serve as the basis for any purchase or sale in real estate.